Canadian real estate is impervious to crashes, it has been said. There can be no way prices can ever come down. This is, of course, all according to the mainstream financial media and those who have everything riding on the fact that real estate will continue to rocket upward. There's just one issue, however. You came here for the truth, so let me unveil that for you. Today we are going to have our focus entirely on the Bank of Canada's move. Let's look at it right away very quickly. The Bank of Canada has raised its key interest rates as expected to a whopping 0.5%. This is the first time they've done this in 7 years. So we're looking at the same sort of policies that we've seen with the Fed in the US. Increase rates very slowly, incrementally, and then see how everything pans out. All central banks, all throughout history, had the same sort of policies in mind. When things are doing well, they like to keep the interest rates low because they want to keep that bubble expanding and expanding. And then when things start to get a little too hot, they increase interest rates, but they do so too slowly. So the bubble gets bigger and bigger and bigger, and the heat is generated and everything is sort of fomenting. And when there's a recession, what do? Well, they will, in fact, drop the interest rates as fast as humanly possible. And that's really a simplified version of what has happened. It's a cycle that's continuing. And there's no doubt that there is a breaking point. I don't know what the number is, but borrowers will be crushed if interest rates rise to even below an average level for interest rates historically. That you can bank on. Speaking of banks, the big 5 banks increased their prime rates after the Bank of Canada's interest rate hike. This is expected, and I covered it previously, but what we're looking at here is the commercial banks, which lend to the people, are in fact increasing the rates as the Bank of Canada does so. They want as big a spread as possible in between the cost of borrowing and the cost or the lending, basically. So what we have here is just corporate profits. That's it. They will continue to do so. The only issue I have here is that if they increase them to a certain rate, people will not be able to afford their homes, their big ticket items, and this could very quickly become crisis territory. This is what I found interesting about Bank of Canada was that they didn't keep it at 0.5 for an extended period of time. In fact, they kept it dropped. Then they decided to raise it because, of course, oh yes, everything's okay now, but they had to bring it down again, and they had to do so simply because of the fact, why? Well, the economy is not doing well. And they know that. The only reason they're doing so now is to save face. They're late in the game on that, way late. Canada is in serious trouble. The household debt to income, something that I've talked about before. Look at it. Just look at it. You think that's manageable? How in the world is that manageable? Household debt to income ratio. You talk to people all the time, who have heavy amounts of debt, and they say, look, my house is going to continue to rise. I don't need to worry. And that's in their minds, that's a fact. Canadian household debt well above the US peak. And you can see this here. I mean, I don't know what to believe necessarily. Is that the real values? All I need to know is that when you look at the Canadian, you're seeing massive amounts of household debt. It's just astronomical the way that this has increased. I mean, you look at the housing prices and you got to think to yourself for a moment, what in the world are they allowing to happen? How did the bubble ever get this big? It's ridiculous that they could allow this. And this is the government. I mean, they have manipulated the interest rates to such a degree, and they don't want to do anything about it. Raising it to 0.5% isn't going to do much of anything at all. Maybe people might get spooked. Maybe a little, investors might move elsewhere. But ultimately, what has happened is, the damage has been done. Canadian households' high debt service ratio. So again, similar situation we're looking at here. There's no way people can ever afford the amount of debt that they've brought onto themselves. It's just not possible. It's a fact. This is talking about what has happened within Vancouver, suggesting that the foreign buyers tax a year ago has had a significant impact on the market. We haven't seen a significant decline in foreign investment activity in Vancouver following the tax. What led to the slowdown was really more domestic buyers waiting to see what the tax will do. And I believe that this is really just the beginning of what we're about to see. Right now, that may be the case. Perhaps 3 years down the road, we're going to look at this time and realize, oh no, that actually was the beginning. When you see what is happening with interest rates and the effect it has on debt, we will realize the fact that everything that the government is doing right now or has done has caused a major catastrophe, and we're watching it in slow motion. There's no way that people in Canada will be able to afford $1 million homes. Most people, quite frankly, just cannot afford it. They can't afford it. They've bought it. The bank has given them the money, but they can't afford it. The foreign buyers, I think that the foreign buyers will probably just look elsewhere, or many of them anyway. And it's a simple matter of fact. If you are a foreign buyer, do you necessarily have to buy in Vancouver? No. You can go to another market. You can go to the market that's not very far out at all and still have, the same type of investment. But I think that it's a little bit skewed. Let's just say that. Without going into more detail, let's move on here. I want to complete the video. 7% of Canadian workers work in housing construction, double of the share of the US. Now think about that for a second. How much unemployment would increase should Canada's home prices begin to decline? And it's very clear that it is very beneficial to allow the housing boom to continue in Canada. Of course, this is hurting people very badly, and it will be seen in the coming years. There's no doubt about that. You can't continue to expand at this rate of debt forever. It's a simple matter of fact. It's a mathematical certainty. But here we are watching it all in slow motion. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to push these videos higher up in the YouTube search rankings. I appreciate it. And last but not least, if you found the video informative, I know you'll find my books, The Money GPS and my new release, Global Economic Collapse, even more informative. So there's links in the description below to check out these. You can actually flip through them. Amazon has a look inside feature. It'll allow you to do that. So links are in the description for you to check out. Take care.